Welcome back to the garage, and it's time for another episode of the Token Teardown. And just in case you're new here, this is the only show on the internet bold enough to drag your favorite crypto project into the bay, throw it on the lift, blast it with 1,000 lumens shop light, and tell you flat out whether you're looking at a real performance build or something somebody slapped a badge kit on and prayed nobody crawled underneath. And today on the lift, Canton Network, ticker CC. And the real question we're answering is simple. Is Canton the institutional Ferrari SF-25, a precision-tuned Formula One race machine built for billion-dollar laps, or just another brochure queen pretending it belongs anywhere near pit lane? Because in this garage, we don't judge by the paint job, we judge by the engineering under the carbon fiber. Now, yes, we are going to talk price targets later. I know that's everybody's favorite lane. But before we get into the charts, before we start imagining how high this thing can rev, we got to figure out if Canton even deserves a spot in your lineup in the first place. Especially because this thing really came on the scene almost stealth, like a factory team rolling out an F1 prototype at midnight with no press release. One day, nobody was talking about it. The next day, institutions were already running laps on it. Because anybody can chase a green candle, especially that guy at work with his entire portfolio on crypto.com. You know the one, Chill Guy. The same dude who's been holding that one meme coin since 35 cents, still posting it on Facebook every morning like the devs are going to see it and magically pump it. He doesn't know what market cap means. He just knows he bought the dip 14 times. At this point, he's personally keeping half the meme coin devs in business. But we don't do that in this shop. We don't chase, we don't guess, we inspect, we diagnose, we get to the truth. Oh, and before we dive into it, if you've got a project you want on the lift, let us know in the comments. It might be the next one we tear down right here in the garage. And speaking of the truth, big shout out to Triple X, the research animal himself. He's the one cracking through enterprise PDFs, decoding regulatory footnotes, and pulling details even the founders forgot they wrote. None of these teardowns happen without him grinding behind the scenes. Now, before we roll Canton the rest of the way up the lift, smash that like, hit the follow, and share this with your fellow gearheads. We're building this channel one degen at a time. All right, today's teardown is a different breed. It's not loud, it's not meme-powered, it's not a degen side quest. This one is quiet force, institution-grade engineering, carbon fiber precision, the kind of build you don't hear until it blasts past you at 220 miles per hour. Ladies and gentlemen, Canton Network, CC. Let's clear the lift, get the gloves on, and find out if Canton really deserves a spot in your garage, or if it's just another glossy brochure promising F1 performance with nothing under the hood. All right, gang, let's talk about who built this machine, because this isn't some meme coin garage job. This thing was put together like a Ferrari F1 car. Real money, real engineering, and a pit crew that's been tuning financial engines for decades. First up, Yuval Rooz. Came out of Citadel and DRW, and DRW stands for Don Wilson's trading firm, one of the biggest high-speed proprietary trading houses on the planet. Yuval builds systems where milliseconds decide millions. He's the team principal on the pit wall, calling strategy at full speed. Next, Shaul Kfir, the cryptography aerodynamicist, co-creator of LibSnark, one of the earliest zero-knowledge toolkits. Zero knowledge simply means proving something is true without exposing all the private details. Shaul has been shaping blockchain privacy longer than most people have known what a smart contract is. Then Eric Saraniecki, also from DRW, co-founder of Cumberland, one of the first major institutional crypto trading desks. He's the telemetry engineer watching every data point, liquidity flow, collateral movements, settlement timing, and powering the entire engine, Don Wilson, founder of DRW. When his name is attached to a build, it's not a hobby project, it's a serious financial machine expected to perform under pressure. Now the garage itself, the Global Synchronizer Foundation, under the Linux Foundation. This isn't a DAO with emoji votes, it's Ferrari's control tower. Quiet, precise, professional. And the sponsors? Goldman Sachs, Citadel Securities, DTCP, BNP Paribas, TradeWeb, Franklin Templeton, Circle, DRW, Zodia Custody, Talos, Flowdesk, QCP Capital, Broadridge with $8 trillion a month on their repo rails. These aren't future partners. These are institutions already plugged in. This is Ferrari's F1 garage, and Wall Street's paying the fuel bill. All right, gang, now that we know who built this machine, let's talk about what Canton actually does, because a lot of crypto projects throw around big words and hope you won't ask what any of it means. Canton doesn't need hype. It fixes two real, concrete problems that slow down global finance every single day. First problem, everything in finance is disconnected. Blockchains don't talk to each other. Banks don't talk to each other. Government systems run on completely different technology. Private ledgers are sealed off from the rest of the world. And every previous attempt to fix this either exposes too much private data, slows everything to a crawl, or requires everyone to rebuild their entire system from scratch. Picture a garage with 20 engines from 20 manufacturers. They all run, they're all powerful, but none of them mount to the same frame. That's the financial world today, a collection of engines that can't run together. Here's what Canton does. It doesn't rebuild the engines. It builds the track underneath them. It creates a synchronized layer that lets banks, blockchains, asset networks, and government systems finally coordinate, settle, and operate together without forcing anyone to replace what they already use. Not a bridge, not a workaround. A true coordination layer that actually lets the systems run in sync. Second problem, privacy. Real, regulated privacy. Public blockchains broadcast everything, every move, every transaction, every dollar. That works for memes, it works for open DeFi, it does not work for institutions moving billions or handling sensitive financial data. No bank or asset manager is going to put their positions, movements, or client information on a public scoreboard. Canton solves that. It lets only the parties involved in the transaction see the details, while still giving regulators the oversight they need. The rest of the network gets none of the sensitive data. It's like tinting the windows on a race car. The crowd can't see your gear changes. The officials still see everything they need to keep the race fair and safe. And then there's the speed and scale issue. Most blockchains are single-lane highways. When traffic piles up, everything slows down and fees jump. Canton doesn't do that. It breaks itself into many independent subnets that can all run in parallel. Above those tracks is the global synchronizer. Think of it like race control, tying all the lanes together so every car finishes in the right order no matter what track it came from. That means Canton can scale by adding more lanes instead of trying to shove more cars into one. So here it is in one clear line. Canton is the first network that lets institutions operate privately at high speed around the clock without rebuilding their entire technology stack. Banks get privacy, institutions get performance, funds get 24/7 settlement, developers get a unified, reliable track, and the whole system finally works together the way it should. It's the difference between a garage full of engines collecting dust and a team running real laps in perfect coordination. All right, let's get into how this machine actually runs, because Canton doesn't fit inside the usual crypto categories. It doesn't behave like your standard one-lane layer 1, and it's not pretending to be a rollup or a bolt-on sidechain either. It takes a different approach completely. Most blockchains try to run everything on one giant track. Every app, every user, every transaction, all jammed into the same lane. Those systems work fine until they don't. When traffic piles up, fees spike, performance drops, and suddenly the whole chain feels like a highway at rush hour. Canton avoids that entirely by changing the layout of the track. Instead of one giant chain, Canton is built as a network of many smaller, independent ledgers running in parallel. Each ledger handles its own workload privately, with its own rules and its own participants. You can think of each one as its own track on a racing complex. One track might be for a bank's settlement process, another for a tokenized fund, another for a stablecoin platform. Each one runs smoothly without stepping on the others. Now here's the part that makes Canton different from every other system. Even though all these tracks run separately, there's a single timing system above them called the global synchronizer. That's the control tower. It keeps everything in order when those separate tracks need to work together. If money needs to move from one application to another, or collateral needs to update across two ledgers at once, the synchronizer ensures the entire move happens cleanly and atomically, all together or not at all. This is where people ask, so is Canton a layer 1 or not? The clean answer is yes, it is, just not in the traditional way. Canton is a layer 1 made up of many private tracks tied together by one coordinated timing engine. Instead of squeezing everything into one lane, it scales by adding tracks while keeping the entire system synchronized. Underneath all of this, Canton uses a smart contract language called DAM. Unlike typical blockchain languages that broadcast everything to everyone, DAM only shows information to the exact parties who need to see it. The network still verifies everything, but it doesn't leak private data. It's privacy built straight into the wiring, not added afterward as a workaround. Inside each track, the system runs its own consensus, its own way of agreeing on what's true. Then, at the synchronizer level, Canton runs a higher level coordination system across trusted institutions. That's how the network maintains order, even when hundreds of ledgers are all running at once. And the important part is this: Canton doesn't force anyone to abandon their existing systems. It plugs into what institutions already use and ties everything together cleanly. It's not asking a bank or a fund manager to move everything onto one chain. It's creating a synchronized layer that finally lets all of those systems operate together. So the drivetrain looks like this: independent ledgers for speed and privacy, and one global synchronizer for timing, finality, and coordination. No bridges, no wrapped assets, no traffic jams, no leaking data. Just a smooth, tightly controlled race environment built for serious workloads. That's how Canton runs under the hood. It's deliberate, it's synchronized, and it's engineered for the kind of high-pressure financial operations where downtime isn't an inconvenience, it's a disaster. All right, now let's talk about the fuel system that keeps this entire Canton engine running. In crypto, we call it tokenomics, but really it just means how the money moves through the system and why the token exists in the first place. Canton's token, CC, doesn't work like the hype coins everyone's used to. There's no giant pre-mine, no secret early unlock, no insiders sitting on bags waiting to dump on retail. When Canton launched, the supply started at 0. Every token in circulation today was earned by actually running or contributing to the network. And that brings us to the first key point. CC is not a meme token, and it's not a lottery ticket. It's a work token. It exists because the network needs something to reward the people running the infrastructure and to pay for the services the network provides. Now let's break down how that works in plain English. Whenever you run an application on Canton and it needs to perform something that crosses from one subnet to another, you pay a small fee in CC. Those fees go to the global synchronizer, the timing system that keeps the whole network in order. That synchronizer isn't free. It's run by major institutions acting as validators, and CC is the way those institutions get compensated for keeping the system reliable. On the other side of that, new CC gets created as rewards for the institutions and developers powering the network. But here's the part that keeps everything balanced. All the CC that gets paid in fees gets burned. Burned meaning permanently removed from circulation. So new tokens flow in as rewards and tokens flow out when fees are paid. The system is always fighting to stay in balance. If the network gets busier, more CC gets burned. If it's quiet, more CC accumulates. Canton calls this the burn-mint equilibrium, but the simple version is this: usage determines supply pressure. The more people use the network, the more the token supply tightens. Now, let's talk about how many tokens we're actually dealing with. As of right now, there's around 35 billion CC in circulation, and over the first decade, the total minted supply could go up to roughly 100 billion before leveling off. There's no fixed cap like Bitcoin, but there's also no runaway printing. After that first decade, issuance flattens to a predictable amount every year. Another important point: because there was no big investor round dumping cheap tokens onto the market, the people holding CC today are mostly the ones using the network or providing some kind of value to it. the super validators, the developers, and the applications that actually move real assets across the system. That means there isn't a ticking time bomb of early unlocks waiting to hit the market. The only real inflation comes from network rewards, and the burn mechanism is always pushing the other way. The last piece of the fuel system is utility. What does CC actually do, besides pay fees and reward infrastructure? Well, it's the key for moving anything through the global synchronizer. If a transaction needs to cross from one private ledger to another, CC is the fuel that allows it to happen. It's the toll you pay to use the coordinated track system. The more value that flows across Canton, the more demand there is for CC, and the more supply gets burned along the way. So here's the simple version, the version anyone can understand. CC is earned by keeping the network running. CC is spent when the network is used. And the system burns what gets spent to keep supply under control. It's a closed-loop fuel system built for real usage, not hype cycles. It doesn't rely on promises. It relies on activity. That's the fuel mix. All right, now that we've talked about the fuel system, let's get into something far more important than theory. Who is actually using this thing, and who Canton is up against in the race? Because in crypto, every project sounds good on paper. Everything has a pitch deck. Everything has a vision. What separates the winners from the wannabes is who's putting real miles on the track. Canton is not getting tested by random Telegram groups or influencers with cartoon profile pictures. The people using Canton are institutions running real financial workflows. Let's start with one of the biggest, Broadridge. Their repo platform handles more than $8 trillion a month. That's not a typo. $8 trillion. They moved that entire system onto Canton's rails so they could settle trades faster and around the clock. That alone is more real-world usage than most blockchains will see in their lifetime. Then you've got Franklin Templeton. That's a $1.5 trillion asset manager. They're using Canton to tokenize and distribute fund shares and to make those assets easier for institutions to use as collateral. That's not a test, that's production. Next is Hashnode. They issue a tokenized money market fund called USUSC. It's used for treasury operations and short-term yield, and they put it on Canton because the network lets them move that asset privately and atomically across different applications. TradeWeb, one of the major bond trading platforms, has run after-hours treasury financing on Canton. DTCC, the group that clears and settles U.S. securities, connected their own internal systems to Canton for tokenized collateral pilots. Zodia Custody, Flowdesk, QCP Capital, and a list of liquidity providers you've actually heard of are plugged in and using Canton Rails to move assets and manage positions. This isn't maybe someday. These are firms that don't put their name on anything unless the engineering is real and the reliability is proven. Now let's talk about the competition, because Canton isn't racing alone. There are a few other players who are trying to solve similar problems, but none of them take the same approach. The first is Corda. That's R3's private ledger system. A lot of banks have tested it, and it does offer privacy. The challenge is that Corda networks tend to be walled gardens. One consortium here, another consortium there, none of them talk to each other. It's like having a bunch of private tracks with no way to sync them. Canton's differentiator is the ability for all those private ledgers to coordinate through the global synchronizer. It's not a cluster of isolated systems, it's one connected network. Then you have Ethereum and its rollups. Ethereum has the developer community, and rollups help with speed, but privacy is bolted on after the fact. Institutions don't want retrofitted privacy. They need it built into the engine from the beginning. And coordination across multiple rollups is still a very hard problem. Canton solves both issues directly. Hedera is another one. It's fast, it has an enterprise governing council, but it doesn't have Canton's fine-grained privacy model or its ability to run hundreds of separate private ledgers that still synchronize cleanly. Hedera is one big chain. Canton is a connected network of many chains. A few specialized chains like Polymesh focus on regulated assets, and they're serious projects, but they don't have the same kind of institutional backing or the synchronized architecture Canton has. So here's the simple version. Corda has privacy, but no shared network. Ethereum has scale, but no built-in privacy. Hedera has speed, but not the subnet architecture. Canton combines private ledgers, high throughput, and atomic synchronization in one system. That's why the biggest institutions are testing and deploying on Canton. It's not the loudest chain, or the flashiest, or the one retail talks about every day, but it's the one quietly getting plugged into the plumbing of global finance. And in this part of the race, that's what actually wins. Now let's talk about the obstacles and the red flags. In this garage, we don't get paid to sugarcoat anything. We just tell you what we see. Canton looks strong, the engineering is serious, and the roster behind it is the real deal. But this network is still young. It hasn't survived years of market stress, regulatory chaos, or the kind of unpredictable events that test a system's true limits. That's the first obstacle right out of the gate. Not enough road history to know how it behaves under every condition. Next, let's talk architecture, because this is where most of the questions come from. Canton's heart is the global synchronizer, the timing layer that keeps all the private ledgers in perfect order. That synchronizer is run by a set of major institutions. They're regulated, audited, and professional, but they're not anonymous or open to anyone. So no, Canton isn't decentralized the way a public chain like Ethereum is. It's a federated model. Known operators, coordinated governance. It's a design choice meant for institutions, not a decentralized free-for-all. Depending on who you ask, that's either a strength or a red flag. Speed is another concern people raise. Canton doesn't advertise a giant transactions per second number because it doesn't run everything through one big pipe. Each application gets its own private track, so the system scales sideways by adding lanes, instead of cramming everyone into one. The proof is in the real-world workloads it's already carrying. If it couldn't handle institutional traffic, the institutions already using it wouldn't be anywhere near it. And now the real question: how easy is this system to manipulate? The answer is far harder than most networks. You can't spin up fake validators. You can't buy your way into control. You can't spoof consensus. You'd have to compromise several major financial institutions at once, the same type of organizations that already secure settlement systems, exchanges, and large-scale trading platforms. That's not a realistic attack path. But let's keep it honest. That synchronizer layer, as powerful as it is, represents concentration. If those institutions ever misconfigure something, suffer an outage, or fall out of sync, the network pauses. That's the trade-off. Canton shows reliability and accountability over open decentralization, and choices like that come with responsibilities. So the bottom line is this: Canton's biggest risks aren't scams or technical gimmicks. They're time and operational maturity. It's a young network with a bold design and heavyweight backers, but it still has years of proving left to do. That's the truth, straight from the garage. All right, before we hit the dyno and close this teardown out, let's talk about who's actually watching Canton and why it's even on the garage radar. The community around this thing isn't loud or chaotic. You don't have meme raids or hype storms. It's mostly people who work in finance, tech, and infrastructure paying attention. Analysts, engineers, institutional folks. The retail crowd is smaller, but the ones who are here understand exactly what Canton is trying to become, and that leads right into the narrative. The biggest trend in crypto right now isn't memes, it's real-world assets. Tokenized funds, tokenized bonds, and institutional settlement moving onto new rails. Everyone is trying to figure out who will run the digital backbone once the old systems finally get left behind. Canton sits right in that lane. Privacy, compliance, synchronized settlement, all built in from day one. It's not chasing hype. It's positioning itself under the one narrative in crypto that actually matters. Now let's bring in Lulu, our head of technical analysis. 4 hoofs, a tail, and yes, for anyone new, she is an actual pig, but she reads charts with more accuracy than half the analysts on the internet. Let's paint the picture starting from where we are. CC is sitting around 8 cents, and that gives us a clean baseline for where things could go. Lulu breaks this into 3 scenarios. Scenario 1, stability lane. Canton keeps moving along at its current pace. No major breakout, no collapse, just steady network usage and slow expansion. In that world, CC stays tied to fundamentals. 8 cents becomes 10, maybe 12, as adoption grows but doesn't explode. It's a modest, grounded climb. Scenario 2, adoption lane. Institutions lean in. Repo volume grows. Tokenized funds expand. Collateral starts moving across Canton consistently. In that case, CC becomes a toll token, sitting on a busier highway every month. 8 cents stretches into the mid-teens, maybe into the 20-cent range, as usage pushes both demand and burn. Scenario 3, acceleration lane. The full institutional narrative hits. Crypto moves toward 20 trillion. Real-world assets finally take center stage. Canton becomes one of the main rails for settlement and collateral. In that environment, CC could see a much larger multiple simply because the system is being used around the clock. 8 cents becomes 25, 35 cents, and possibly beyond. Not because of hype, but because institutional volume forces the economics upward. It's the busiest highway scenario. And because this is the garage, we always acknowledge the downside. If institutional adoption slows, or regulation jams the brakes, or the global synchronizer ever misfires, CC can slide back to that 6-cent support range. That's not a failure of the tech, it's just the reality that infrastructure tokens move with usage, not emotion. Now, with Lulu's read in place, let's put this thing on the dyno and score it the same way we score every serious build in this shop. Technology, 9 out of 10. The architecture is different from anything else on the track. Purpose-built, well-engineered, and designed for regulated markets. Very high marks. Purpose and direction, 9 out of 10. This network knows exactly who it's built for. Institutions, not retail, not memes. Clear lane, clear mission. Adoption potential, 8 out of 10. Real players are already using it. Broadridge, Franklin Templeton, DTCC, TradeWeb. That's uncommon this early. It could easily climb if usage grows. Token economics, 7 out of 10. Balanced model, burn and mint equilibrium, no pre-mine, solid foundation, but emissions and long-term supply pressure depend on usage. Decentralization and architecture trade-off, 6 out of 10. The global synchronizer is federated, reliable but not fully open, a trade-off that works for institutions but still a deduction. Maturity and track record, 6 out of 10. It's young, it hasn't survived a decade of market chaos. Time is still the missing ingredient. Add it all up, divide it evenly, and Canton lands at a 7.5 out of 10 on the Garage Dyno. Not a meme rocket, not a hype machine, a purpose-built financial engine with real horsepower, real institutions behind it, and a long race ahead. And that's Canton. That's the teardown. And that's a wrap from the garage. If you've got a project you want to see on the lift next, drop it in the comments. We read every single one. Hit like, hit follow, and we'll see you in the next teardown.